Hi, I'm Liz Toth with Liz Toth Properties, powered by EXP Realty, and we are in our final video for our lender series. I'm here with Michael Lassiter with CMG Home Loans, my preferred lender, and we are talking today about mortgage for a vacation home versus second home. We're also going to talk a little bit about investment. So I'm going to turn it over to Michael.
Awesome. Well, thanks for having me today, Liz. So first, just to kind of clarify, primaries versus second homes versus vacation properties. So everything regardless if it's CMG or the next lender, it's all goes based upon risk. So your primary homes, you're going to get the best interest rates. Okay, they're the best terms. Second homes require, the main difference is a second home requires a little bit more of a down payment, and everything's based upon risk for all lenders. So they assess the risk. So a second home is a little more risky to a lender versus a primary. So the requirement on a second home is that you put at least 10% down on that property. On your vacation homes, it's typically a 20% down payment is required on a vacation home. 20 to 25% is kind of the sweet spot. And that's because there's no mortgage insurance that exists to insure the risk at a higher loan to value on the vacation homes. Okay. So that's the main difference. Primary, you can get in for zero down. Your vacation homes, which are your investment properties, are going to typically require that 20 to 25% down. And your second homes are a minimum of 10% down. And as far as interest rates, again, it's based upon risk. So you're going to pay a higher rate on a second home and a vacation property.
Okay. But there's definitely a difference between the two and how those loans are structured, vacation versus second.
Absolutely. I mean, from an underwriting standpoint, again, they look at, is the property in where is it located in difference of your primary residence? So some people live on the coast and they can have a primary residence and it's still classified as a resort area. So you could still buy a second home depending upon how many miles away you are from that area. So that's how they, from an underwriting standpoint, they assess, does this qualify for a second home financing versus a vacation property or investment property?
Okay. Very cool. And now how do investments fit into all of this as well? So if somebody's an investor.
Well, typically an investor, you can have so many finance properties as a ruling as well. So an investor typically can have, or an individual can have up to 10 finance properties total. And then you have to look at, some type of commercial type line of credit or something for, large investors. That's typically what they do, but you can have up to 10 finance properties. That's a underwriting guideline for all lenders.
Okay. So then, so you said if you go more than 10, then you have to go more commercial route.
Correct.
Okay.
And on the investment properties as well, I mean, it can be multi-unit. You can do duplexes, quadruplex, condos, whatever. So
if you do multi-units, does that count as one, or do you count each individual unit?
it's a good question. So one multi-unit would just be one finance property.
Okay.
And it's pretty popular for, investors. So you can get one mortgage and lease out. Some people buy it as a primary. You can buy a quadruplex as a primary as well and lease out the other 3 units for investment to help you qualify for the loan as well. You can still structure it as a primary as well. So that's pretty popular. As far as, everything's based upon risk. So CMG versus the next lender, interest rates on a second home or a vacation property are typically about 2 points higher, 1.5 to 2 points higher than a traditional primary residence.
Okay. And that's like pretty standard across the board. Like it's not going to vary a lot from lender to lender.
Correct. So all lenders, whether it's CMG again or lender B, so to speak, the buyer kind of fits in a grid, which is a pricing quadrant that Fannie Mae or Freddie Mac has come out. And it's basically what's called a loan level pricing adjuster. So if you're buying a second home, you're putting 10% down, there's about a 2.5 point add-on for that. So the consumer can choose to pay discount points to buy down the interest rate to a traditional primary residence. But what lenders do, and most consumers just opt for a little bit higher interest rate. And right now it's typically about 1.5 points higher than a traditional primary residence.
Awesome. Any advice that you would give someone who is looking to invest or get into investing?
I think, get in touch with a good realtor first and get some advice. And I think getting, qualified up front and walking someone through the different types of investment options there are, what type of down payment requirements there are. Here at CMG, we've come out with a couple alternate options for our clients to help them reduce some of that interest rate spread. We have some private label securities, which basically means it's a loan that we hold on our books. So for our investment clients and second home clients, we're traditionally about a point better than some of our competitors. We also offer a unique product called the all-in-one mortgage here, which our investors and second home buyers really love because it doesn't have the same requirements of those adjusters that Fannie Mae and Freddie Mac have put on lenders based upon risk. So, and the beauty of the all-in-one is as interest rates come down, you never have to refinance. So
That's nice.
Yeah, so we have people who buy second homes or primaries with all-in-one. They have complete access 24/7 to the equity in their house, and they can take cash out without having to come back to us to borrow the money and use it to put down on the second home or the vacation property as well. So it really gives all-in-one product for our investment guys and our second home gals, really gives them the power to pay off their mortgage in half the time and build their real estate investment portfolio.
That sounds amazing. And that's only offered by CMG.
Correct. Yeah, it's a product that we created back in 2005. We've been around for 31 years. I think we're the 5th largest lender in the country now. And so that's something, someone is interested could check out the all-in-one mortgage on our CMG website as well.
Awesome. Well, thank you so much, Michael. I appreciate you sharing this information. Michael is local here in Raleigh, and his information is in the verbiage below the video if you want to reach out and learn more about, investing or the all-in-one program or any other programs. CMG offers a lot of really unique programs and has some great options available for folks in the market today. So be sure to connect with Michael, and thank you for taking the time. This is the final video in our lender series in honor of National Mortgage Professionals Month. Thank you, Michael, for being here and participating in this interview series with me. And thank you everyone for taking the time to watch our videos. And if you have any questions about lending, get in touch with Michael. And if you have any questions about purchasing a home in the Raleigh-Durham area or selling a home in the Raleigh-Durham area, don't hesitate to reach out. And if you're considering relocating to the area, check out my YouTube channel, Welcome to Raleigh. There's more information on the real estate market, city tours, community tours, buyer tips, and more videos like this. So thank you again, Michael, and I appreciate you being a part of this.
All right, thanks.